My name is Cody Kraus, and I'm a real estate broker owner that's obsessed with everything real estate. Investing, building, selling, developing, farming, you name it. I've been doing this since I was 18 years old, and I've learned a ton through trial and error, and I've met some of the coolest people ever. This is a show where I invite these people on to talk about their experiences and mine, plus everything else real estate. Let's go. Okay, well, welcome back to another episode of the Everything Real Estate Show, everybody. 2025 has obviously come to an end. Here we are in 2026. What I wanted to do today is review kind of the Windsor-Essex County real estate market in a nutshell. So we're going to look at what happened with listings, with pricing. Then we're going to take a look at some national news. We're going to look at everything from number of homes sold to average or benchmark home sale price across Canada. We're going to take a look at some construction trends, what's happening with interest rates. And then based off of everything I saw happen in 2025 and the years leading up to it, and just paying attention to what's happening in the real estate market so far in this first couple weeks here of 2026 and kind of forecasting into the future, I'm going to make a few predictions. So let's start going through these slides. This is kind of based off of a presentation that I made to our brokerage, kind of first meeting of the year kickoff at our real estate brokerage. So I've adapted this a little bit so it's more specific to our audience, not kind of going to bore you with all the real estate industry specific kind of news. But let's start going through it and taking a look. Okay, so market activity, which is number of listings. And if we take a look at year to date, so you're combined of all the months, not just, 1 month, looking back in a nutshell. These stats here go all the way to November. I didn't include the December stats in it, just because I didn't have them yet when I created this presentation. But December was a very, very boring month and not a whole lot happened. And it's really not going to have affected a whole lot the actual year-to-date numbers cumulatively for the entire year of 2025. So at the end of November, if you look at the year-to-date and compare 2025 to 2024, listings were up 12%. Okay. Now let's take a look at our number of sales. This isn't the average sale price. This is the average, this is the number of homes sold. It was down 2%. All right, so we hear that listings are up 12%. So number of homes that were listed for sale up 12%, number of homes sold down 2%. So this tells us that supply increased and demand decreased. So naturally you would think, okay, well, obviously prices came down, right? They're almost unchanged. So average sale price 2024 was 578. 2025, it was 571.5. So they were down, but they were down about 1%. So almost negligible. And you think, okay, well, if there was that much of an imbalance, again, 12% more listings, 2% less sales, that's like an imbalance of 14% when you look at the two of them combined. That should affect prices more than 1%. Well, there's other things that are happening in the real estate market here at the same time. And one of them is interest rates. So I have these two charts here. This is from wowa.ca. They put together some great information on the Canadian real estate market. And the graph on the left is our historical 5-year fixed mortgage rates. And on the right, historical 5-year variable mortgage rates. So this has the big 6 banks in Canada, all in different colors there. And just one important thing to note is I believe that this is based off of the posted rate, not necessarily the rate that you would get if you were signing documentation with the bank. So what you'll notice is 2023, about that point on the graph where you kind of see these high points over here, that would have been kind of our peak interest rates. So, in 2020, 2021, you were seeing 2% or even sub 2% on the variable side. Mortgages, which we call negative real interest rates because our inflation was much higher than 2% during that period of time, but you could borrow money for 2% or less. So negative real interest rates. Now, over the course of 2000, kind of towards the, I think it started about March or April of 2022, Bank of Canada really started increasing interest rates, and that's where we see this graph take up and to the right. And they kind of peak around 2023 going into 2024. That's where we saw some interest rates over 6%. And from that peak, they have come down now, and over the course of 2025, especially, actually even at the end of 2024 too. Since the end of 2024 and basically throughout the course of 25, you could get around a 4% mortgage rate. if you have good credit, again, it's not necessarily their posted rate, but that's what most borrowers were getting. This month, January 2026, there's actually variable rates being shared by mortgage brokers right now. Shelley Russell just sent me her rate sheet for the end of last week, and there's 3.65 variable on a 5 year being offered, and you're about 4.09 right now on a 5 year fixed. Again, obviously that's on approved credit, and that's with an A lender on specific mortgages. But anyway, so interest rates are part of the reason why, even though there was more supply, less sales, pricing really didn't change. I think that's part of it. And I think there's another part of it too. And we'll take a look at some other things like consumer confidence indexes and also construction trends across Canada. But that's the big one, right? For you and me, average people that are, owning a home or looking to buy a home in Canada, most of us are getting a mortgage. So the cost of borrowing the money has a huge impact on our ability to do so and what we're willing to buy and our confidence in our decision at that time. All right, now let's look at kind of a national review. So this is the number of sales that are happening on a monthly basis across Canada, and this graph is from the Canadian Real Estate Association, so probably the best data that we can get on this. Um, this goes all the way back to 2007. So when you see the 10-year monthly moving average, you'll notice it was really low in 2007. That's because there just weren't as many homes trading on an annual basis. Prior to that, we've had a lot of population growth since 2007, especially since COVID. So you'll notice that that black line slowly goes up and to the right as it crosses our graph here. And then obviously we have some huge spikes and some huge valleys. So valley number one, 2008, 2009, that was the financial crisis. Then it recovered from that, went back down again, and it's kind of up and down, up and down, up and down. Then we see a bit of a bull run starting in, 2014, heading all the way into 2017, 2018. Then there was, kind of a dip after that because Toronto's market really hit a high in 2018 as far as average sale price. So then it went a little bit lower after that. And then that huge valley there, that's going to be your March 2020. So that was, the peak of COVID and all the craziness. Nobody knew what was going on. But then, as you can see, the market really took off after that. And that's where we reached new highs and towards the end of 2020 into 2021, seeing over 60,000 homes per month sold. But again, if you look at this graph, you kind of see this 2022, 2023 low here. This is where the interest rates are really heading up at a large increase, and you sharply see the number of sales on a monthly basis decline from there. Bit of recovery, back down again, bit of recovery, bit of recovery. So it kind of seems like it's two steps forward, two steps back, two steps forward, one step back. And it's kind of evening out right now at about 40,000 homes sold on a monthly basis. However, that is lower than our 10-year moving monthly average because it's still affected right now so heavily by COVID. Now, if we look at the benchmark price, obviously you'll see that there was kind of basically a 10-year bull run from 2005, 2015, all the way to 2017. It kind of relaxed from 2017 to 2020. And then we just saw things go on a tear from 2020 all the way to 2022 until Bank of Canada started decreasing interest rates. And that's where we saw it come back down. There's a bit of a recovery in 23, and then it came back down in 24, and it was kind of level all the way through until the beginning of 25. And then towards the end of 25, prices started following. Now, keep in mind, Canada is a country of 42 million people approximately. Last time I saw the GTA as a whole is somewhere between 6 and 7 million people. I think the city of Toronto is about 3.5. But if you consider the GTA as a whole, let's call it 7 million people versus a country of 42, 1/6 of our entire real estate market, in theory, would be Toronto. So there's a very disproportionate amount of emphasis or contribution that one city or one area here would put on the Canadian real estate market as a whole. And you know what? Vancouver's one of our other big cities. So if you look at why prices are falling right now, I don't think it's because the average single family home in Canada is falling. I think it's because of a very, very high supply of condominiums in two major cities right now, specifically Toronto and Vancouver. We started building condos that frankly end users didn't want to buy. Not too many families are going to lock in, a pre-sale contract on a condo that's 5 or 6 years out from your time of signing it, especially if it's 350 to 550 square feet. It's not exactly the type of property that you dream about raising a young family in. So what was happening is we were building condos for investors, and investors wanted smaller and smaller units because the rents didn't go proportionately lower when you skimped out on the square footage. So basically, developers built what investors were demanding, and now we're in this spot where we have a whole glut of supply of condos that end users typically aren't looking at purchasing for themselves. And often you can actually usually rent that condo for less than the cost of ownership at this time, even with the new lower interest rates of around 4%. So that's part of the reason why prices are trailing off towards the end of 2025. I don't think it's because, again, single family homes or semi-detached or townhomes are actually falling in price across the country. I think it's disproportionately affected by the condominium market. So let's take a look at number of sales and average sale price in Windsor-Essex County. Now, if you look at this, it's kind of a compilation of sales and average sale price going from 2011 all the way to 2025. If you look at the number of sales each year, 2011 was pretty low, 47 approaching 4,800 homes sold all across all of Windsor-Essex. And you see that number steadily grow all the way until you hit 2021. So 2013, we saw just over 5,000 sales. 2015, just over 6,000 sales. 2021, we saw almost 8,000 sales. So that was your real peak in trading volume right there. And then it sharply decreased. Again, that was basically following the trend of what the interest rates were there. So in 2022, down to about 5,800. So we went from 7,700 to 5,800 in 1 year, which is a huge decrease in volume of homes sold. 2023 dipped again below 5,000 at about 4,900. 2024 was very, very similar to 2023. So they were both hovering right above and below 5,000 homes sold. 2025 back to 4,700, which we have not seen since 2011. So number of homes sold across Windsor-Essex was very low. Lowest in 10 years, lowest in, it looks like about 14 years. Now, average sale price almost unchanged in the last 3 years. So 2023, we had an average sale price of 556. 2024, 578. 2025, 571. So it is lower than 2022. That's where we really saw that peak average sale price right before interest rates started rising rapidly. But for comparison's sake, our average sale price in 2021 was 552,000. So we're actually about 3 or 4% higher than that right now at 571. Now, if you compare that to the rest of Canada, if I talk to realtors from Toronto, that's not the norm. Toronto prices have not recovered to the 2021 highs. However, ours have. And they've been there for the last 3 years. So it's been flat as far as pricing goes here the last 3 years. Number of homes sold flat the last 3 years. How come they're not dropping more so compared to the rest of Canada? Like Toronto is, basically at a snail's pace compared to this, and same with Vancouver and the surrounding areas there. I think a big part of that, again, we talked about the fact that a lot of the supply is condos versus we're mostly single family here. But the other one we just had a lower price point to start with. So our average home sale here at 571 is a single family home or a fairly new townhome or semi-detached. When you look at what $600,000 can buy you in Toronto or Vancouver, you're probably looking at one of those investor condos. Your average single family home in Toronto is going to be over $1 million, where again, or around that 570. So I think part of the reason why our prices are not falling and our units are still trading in and around the same territory, even though it is slightly lower, I think it's just because we had a lower average sale price to begin with. And our average sale price is more based off of just single family homes, less affected by condos and their supply. However, something pretty astonishing here is, again, we talked about 2011 being the last time we had home sales around 4,700 traded on an annualized basis. Average sale price at that time, just for context, was $170,000. 2011 was the year that I started in real estate, and I can remember very well at that time that a lot of our listings were on the market for 6, 12, 18 months at a time. When prices went up, 4, 5, 6% a year until they hit $200,000 in 2015. Prices hit $200,000 in 2015, and honestly, we thought the sky was going to fall. We're going, no way. Homes have never been worth $200,000, here in Windsor-Essex. But then they kept going up. and we kept seeing, 5% a year. In 2016, we saw a 17% jump in 2017. We saw a 12.8% jump in 2018, and we hit 300,000 there. We had no clue what was happening. And then here we are, 2025. Average sale price is $570,000, and it has been for the last 3 years, which is quite astonishing. Just looking back at this historical trends chart here. All right, so from an industry perspective, what are some things that are happening? There's a company called Swanpool or T360, and they put out a report called Swanpool Trends, and it's kind of probably the largest aggregated report of real estate industry specific data that you can find. In 2025, the theme was M&A. It was mergers and acquisitions. And this is not even just looking at all of Canada. This is mostly the States. But what happens in the States does affect us directly or indirectly, but a lot of times directly. And going through the report for 2026, it looks like it's going to be a lot of the same in 2026. And we did see that here locally in our real estate market. There was a lot of mergers and acquisitions of firms. Again, a lot of real estate brokerages created through that bull trend, especially since COVID, 2020, 2021, 22. We saw a lot of new companies come and a lot of new agents into the industry. And as the number of sales decreased, we saw a lot of mergers after that just because it was less profitable with less homes selling on a monthly and annual basis. So two big things happening in the news in 2025. So Compass, which is one of the largest real estate brokerages in the States, they purchased Anywhere Real Estate Brands, which is the largest franchisor of real estate companies in probably North America, maybe the world. But anyways, this is specifically dealing with their stock that's traded on the New York Stock Exchange. So Anywhere is the franchisor for Century 21, for Coldwell Banker, Better Homes and Gardens, Sotheby's, Chestnut Park, I believe Chestnut Park, Christie's International, which owns Chestnut Park. I'm thinking of that because of Daryl Waddy, but many, many brands in there. So Compass purchased Anywhere. It doesn't, again, necessarily directly affect us in Canada. For example, I work with Century 21. The Century 21 that I'm under and all of the franchises in Canada are under is under a master franchise agreement with Century 21 Canada. We do, benefit from some systems and referrals because of our neighbors to the south. However, it doesn't really affect our day-to-day here in Canada. There's a lot of speculation at why Compass purchased Anywhere and what they're going to I guess, be doing in the future. But to put it into perspective, between those two companies, I believe they'll represent about 40% of the listed sales in the United States in 2026. The sale did just close in, I think, the second week of January. So it's a pretty big deal. There's a lot of speculation about what will happen because of that. And there's some companies like Zillow that are pretty upset about it because they are speculating that Compass is going to try and create a exclusive or private sale network. There's some reasons that some people would want their homes listed exclusively and not publicly. For example, if you're a political person of interest, if you're an elected official or part of a political party, maybe you have some kind of international ties, you might not want your home listed for sale on the market. I think of also, professional athletes or, people that are in the spotlight, celebrity status, or owners of companies that might not want their employees to see their home up for sale, all that kind of stuff. There's a lot of reasons why people may or may not want their homes listed publicly, but they may still want to sell their home and they still need to talk to, a real estate professional to garner some interest in it and have a sale negotiated. And so there's a lot of speculation that now Compass controlling that many of the real estate sellers and purchasers in the United States might have something to do with that. And that upsets companies like Zillow, for example, that have built a lot of their business on basically being the search engine for all the public listings. Now, another big M&A announcement was Rocket Companies acquiring Redfin. So Rocket is a mortgage company. I believe they're the first or second largest provider of mortgages in the United States. They did try and open up in Canada. It didn't work so well in Canada. Just it's a different lending environment. We basically have six big banks in Canada. They have a couple thousand in the States. And the cost at which competitors to the big six can borrow money in Canada is it's higher. on average than the big six banks. So it's not quite the same thing. But when you saw them back out of Canada, it's not because the company's failing and not doing well. They're growing and they're growing at a very, very high rate, and they actually purchased Redfin. Now, Redfin is a real estate brokerage. They have a lot of realtors working under them. Their primary initial function was being a website that you would view home listings on, much like Zillow, but they are also a brokerage. And so now the whole idea with Rocket acquiring Redfin is that they can be involved from the start of the home search to the closing of the transaction and the funding of it. In the States, a lot of times, mortgage brokerages or real estate brokerages also own the title companies, which handle the closings. The whole idea here is whether they begin their home search by getting qualified for a mortgage or looking on listings online, they can look through Redfin or get qualified with mortgage. And now one company would basically handle the home sale or the home purchase from start to finish under one roof. So that's some big M&As that are happening in the States. Now, let's take a look at what's happening in Canada, national perspective here from immigration. This is a report that I'm showing here from Edge Realty Analytics, which is Ben Rabideau. We actually have him coming to speak in Windsor next month in February on the 10th. If you'd like tickets to that, just let me know. You can reach out. For the first time since this graph shows, which reaches back to 2016, we actually saw the population decline during a quarter in 2025. We have not seen that since, well, I don't know what the last year was, but it doesn't show up on this chart here that goes back 9 years. Basically, the population has been growing steadily, and a lot of that was driven by immigration, especially 2022, 2023, 2024. It's really fallen off a cliff in 2025, and I think that's become recently. Politically, it's been okay to say that immigration should be done responsibly, whereas before the doors are wide open. And you can see in the chart next to that one, population growth, Canada year over year. There was just a huge spike. We saw over 1 million people come to Canada in 2023, and that wasn't because Canadians are having a lot of babies. It was immigration. That was most of our population growth. So kind of interesting to see that the population declined. Now, it's hard to say whether or not that's a trend yet. It's definitely a trend now that we're lower than what we saw in the levels of just post-COVID there. However, we don't know if it's actually going to continue decreasing. That's just one quarter that it's showing there a decrease. So we'll monitor that and see what actually happens moving forward. Next one here, again, this is also from Ben. This is talking about housing starts in Canada, and it compares the three types of housing. So single family or freehold title, condominiums, and then rentals. And there's kind of a divergence here happening. So on the graph on the top left here, you can see the orange line is built for purpose rentals, the blue line is single family homes, and the gray line is condos. So coming back to about 2024, beginning of 2024, the number of condos being built and sold really fell off a cliff, and the purpose-built rentals took off to the moon. So you can see basically they mirrored each other in the opposite direction. And outside looking in, they wouldn't look any different to you. So the built for purpose rentals, the apartment buildings that are being built versus the condos that were being built, they look the same from the outside. And actually, a lot of the built for purpose rentals are actually registered as condominiums, but the units aren't sold individually, they're rented out. A couple of reasons for that is the demand for condos really slowed as interest rates increased. The average condominiums monthly fees are going up at a substantial rate. They were very heavily affected by inflation that we saw since COVID. And frankly, again, we were building condos that people didn't want to live in. And so what the government of Canada started doing through CMHC, which is a crown corporation, is they started offering financing called CMHC MLI Select, which allowed developers of purpose-built rentals of more than 5 units to extend their amortization period to as long as 50 years in some circumstances. Most of them, I think, are 45 now. But also they were basically going 95.5 loan to value on the cost of construction. So basically the government said, hey, look, we still have a lot of people coming in. We saw those, immigration trends and population growth trends. Got a lot of people coming in. They can't necessarily afford to buy in today's inflated home value market. But we need places for them to live. So how do we make this doable? So they said to developers, hey, instead of a 30-year or a 25-year, we'll give you a 50-year loan. Instead of, 65 loan to value, 65, 35, or 80/20, don't worry about it. Just build them. We'll give you 95/5 loan to value. So they basically said, okay, look, we still need people to build homes. We understand it's not super affordable to buy those homes right now. The cost of construction is high. But guys, if you rent them out, we'll give you incredible financing like you've never seen before so that you can still cash flow on a monthly basis. Bottom left here, you can see housing starts 12-month rolling. Basically, condos and single family, when you add them together, they have fallen and meeten the purpose-built rental. And so you can see condos and single family falling and going to the right, and the purpose-built rentals on a steady increase since 2015 to their new record that we've seen in 2025. Now, that I believe is also part of the reason why our average sale price in Windsor-Essex County has not really fallen. It's still higher than it was in 2021. It's still higher than it was in 2023. The only year it's not higher than right now is really 2022. And again, it was slightly higher in 2024. But a big part of that is because rentals don't contribute to that number for the average sale price. And the fact that we're building less just means that naturally there's going to be some pent up demand where people were hoping that the prices were going to fall. So builders stopped building because they didn't want to build and then sell at a loss. So when you stop introducing new inventory to the market, naturally the pricing is going to hold or rise if everything else stays the same. And again, there was a lot of other circumstances around there. A lot of other homes came up for sale. We're seeing a lot of landlords that own single family homes get out of the landlord business, especially in Ontario, because of everything that's happened with the LTB, especially since COVID. But that's part of the reason I believe why pricing is holding strong, even though supply is growing and demand was slightly down, is just because we're not introducing as many new homes to the market that you can actually purchase. Okay, let's talk about consumer confidence a little bit. Top left of the page here, Royal LePage came out with an article looking at different areas of Canada. They said on average across the whole country, you're going to see prices drop by 4.5% by the end of 2026. Again, heavily influenced by markets saturated with condos like Toronto and Vancouver. They do go into individual markets and kind of look at the big metro areas and make predictions for those individually. And for example, there's markets like Quebec City and Montreal where you're seeing like something like 8 and 10% forecasted increases, even though you see other areas like Toronto and Vancouver, they're forecasting a drop. Next to that, you see the Maclean's magazine article that talks about the Great Condo Crash, and that's hand in hand with why Royal LePage thinks that prices are going to drop across Canada. It's more to do with condos than with single family. Now, Ben Rabideau in his reports is saying that he does believe there's some pent up demand of home buyers in Canada. And I do think that's the case. Again, we've seen a lot less homes trading on an annual basis the last 3 years than the 3 years prior to that. And that's because people were unsure of things. Politically, there was tariffs, there's, Russia, Ukraine, there's a lot of unrest in the Middle East. There's just a lot of things going on right now. So 2020 started with COVID, the consumer confidence was low. 2023, interest rates were really high. 2024, a lot of international tensions. 2025, we saw Trump come into office, announce everything about tariffs. That's why we've had really bad consumer and small business confidence over the last couple of years. However, you'll see a little glimmer of hope here. Things really started getting better from a consumer confidence and small business confidence standpoint towards the end of 25. And frankly, I think that's because people are just done with the news. They're done hearing about tariffs. They're done hearing about everything else. And again, interest rates have come back to a really reasonable level. And frankly, anecdotally, talking in our office, we're looking at each other's new listings and we're going out and touring them often. And we'll sit there and say, man, for the first time since I can remember, maybe in the last 5, 6 years, homes are starting to look like a good deal. A lot of sellers are coming to terms with what the market is and saying, I just need to move the home. And buyers are getting an opportunity to walk in the door, make an offer. It's based off of data, not off of emotion. You're not sitting there going, well, it's listed at 299. Is it going to sell for 350 or is it going to go up to 500 or 550? No, now most of the time it is based off of other comparables that have sold that are similar homes in similar neighborhoods, and you can actually use real data. And often buyers are getting offers accepted that have conditions to protect them, like the sale of their home, like financing, like home inspection. We're even seeing some sellers get conditions accepted in their offer that says, hey, I want to sell my home, but I know I can't move until I actually find where I want to move to at a price that works for me too. So this is all good things for consumer confidence. And when it comes to the real estate market, I believe, and I think that those are some of the reasons why we're seeing that improve. Sorry, my low battery reminder came on and it shut down my slideshow there for a second. So let's get into 2026 predictions. In 2026, in Windsor-Essex County, as far as the residential real estate market goes, I think things are going to be flat. And that's a really easy prediction to make because the last 3 years have been flat. I think the number of sales are going to be flat. I think the number of listings are going to be flat. I think the prices are going to be flat. And I think that the interest rates are going to be flat. So overall, boring year. But I think boring is good because people like stability and they like predictability. And frankly, I think that's what they're going to get in 2026 is it's going to be very similar to what 2024 and 2025 were. And frankly, I think that that's a great thing. A couple additional predictions. I think that you're going to see rents decrease. That's because we still have a record number of built for purpose rentals coming to the market. So, frankly, buyers have a lot to choose from, and a lot of it's similar or the same product. They're newer apartments. The older apartments are actually, you're seeing those rents still creep up a little bit because there's a big difference in price between the older units available for rent and the newer. Typically, the older ones were below 2,000, the newer ones are all above 2,000. So, because of lack of options, you're seeing the older units actually increase slightly in prices, but on average, you're seeing rents go down. They have been for the last year or two, and I think that you're going to see that continue over the course of 2026. That's locally, but I believe that's nationally also. Private listings, especially when it comes to rentals, are decreasing. Part of that's because a lot of people were trying to scam people. They would take listings of homes on realtor.ca, steal all the photos. Once the home got posted as sold and the listing got taken down, people would put up photos and say, hey, come rent this house at an unbelievably low price. Send me your deposit and I'll hold it for you. And then they would delete the ad, delete the email account, keep the money, and there was no way to get it back. So a lot of people don't want to look at private listings for rental homes right now because of the amount of scams there. And frankly, we haven't seen a lot on the sale market either, really, in the last 10 years. And I think that's because the private industry doesn't know as much how to work with multiple offers. So that's why we saw a big decline in them over the course of COVID and the rise in the real estate market there. And then since the homes that are selling are typically because people need to sell now, they're serious about selling. So they most of the time have professional representation. Now, from a national prediction, market and industry, here's a few predictions I'll make. I do think that you're going to see the number of units sold increase just because it was such a record low in 2025, maybe 5 or 10%. I think the pricing is going to continue to decrease, maybe 5 or 10%. And again, that's primarily driven by GTA and Vancouver condos, even though you got some other markets and asset classes that are actually rising and will rise over the course of 2026. Again, I think interest rates are going to remain fairly constant. We saw what happened when they were increased to, over 5, 6. I think some people, the variable rates at 7%. We saw that that basically grinded the real estate industry to a halt and it hurt a lot of families. It's still hurting a lot of families because of the amount of their proportionate monthly budget that had to go towards housing compared to the, say, 10 years prior to that. So I think the Bank of Canada is going to keep that fairly constant. And again, with everything that's going on with trade wars with the states and everywhere else, they need to remain competitive and businesses need to be able to have access to capital at an affordable rate if they're going to invest in systems and people to scale up their productivity and production. Again, across the country, I think you're going to see rents decrease. That's because we have such a high number of rentals coming to the market. And again, the population isn't growing. We saw it decrease in the third quarter of 2025. I think that once the numbers come out, you'll probably see that there was a decrease in the fourth quarter of 2025. Be interesting to see what happens here in the first quarter of 2026. But even if they don't decrease, I don't think they're going to increase. I think they'll remain somewhere around the same. The other thing is you're going to see a lot of realtors leave the market, much like we saw mergers and acquisitions between real estate brokerages. Frankly, there's a lot of realtors in Canada. At one point, I think 2022 or 2023, I believe they hit 77,000 just in the Toronto Regional Real Estate Board, and I believe it's below 70,000 now, so it's already dropped by about 10,000. And I think that you'll see that continue to decrease locally. I believe we had somewhere around 1,000 realtors locally in Windsor-Essex. Basically, most of the early 2000s, we really didn't see that number start growing until you hit that kind of bull run from 2015 to 2017, 2019, and then all of a sudden the COVID craziness in 2020, 21, and 22, and all of a sudden we saw 1,500, 1,600 now, almost 1,700 realtors locally. So not crazy to think that we'll see that number decrease here, just like it's happening nationally. Now, what we don't know what's going to happen in 2026 is politically, there's a lot going on. I'd say it's the big wild card. So there's still stuff happening between Russia and Ukraine. There's still a lot going on in the Middle East, and it seems like there's something going on with a new country each day. Right now, it seems like there's a lot going on in Iran with the protests there and the Ayatollahs. We still have the ongoing stuff between Israel and Palestine. It seems there's forever things happening in the Middle East, and now U.S. Venezuela, and I guess therefore Russia, Iran, China, and Europe. What's going to happen there? From a Canadian standpoint, our debt's increasing, our productivity has been decreasing. There's province to province tensions in regards to taxation of trade between provinces. And then there's green politics. Are we going to start using Alberta's oil, or are we going to have the pipeline? What's going to happen there? And then obviously what we've been dealing with all the way through 2025 is what's going to happen with the future of the tariffs that the US has sanctioned on many of the countries across the world. So anyways, that's a little bit of a nutshell of what happened in 2025, a few predictions that I've made for 2026, which I know are very boring, but sometimes boring's okay. And I'm excited to see what 2026 has in store. I'm hoping that things calm down on the political standpoint. But in the meantime, let's focus about what we're doing right here and now in our own lives and in our own backyards here in Windsor-Essex. So thank you for tuning in today to the Everything Real Estate Show. And let's see what happens next. Bye for now. Thanks for listening to the show, folks. Please keep in mind that this show is not offering legal, financial, or accounting advice, but rather opinions and experiences in the world of real estate from the host and the guests. If you're enjoying the show, please rate, review, and share with your friends and colleagues. And if you think that there's someone that needs to be on this show, please feel free to connect them with me. Or if there's a topic that should be discussed, feel free to let me know. Thank you so much, and bye for now.